Hello viewers and welcome to the channel. My name is Shannon Rivkin. In this week's video we'll be discussing BHP, which according to one broker is on a 19% free cash flow yield at spot prices. So the question of course is whether the stock is ridiculously cheap. Look, it's very worthwhile looking at a mix of commodities and the performance since the pandemic. Um, Undoubtedly, at least in the early days, very much supported by a government stimulus and huge fiscal packages in China in particular, which meant that iron ore, copper and nickel, at least in the early days, was somewhat supported by the big infrastructure spending in China. Oil, of course, the um, the black sheep, at least in the early days. Of course, we'll call at least at one point futures contracts, even dipping below zero. Um, Anyway, of course, as the pandemic kind of started to recede, and we started to see supply chain challenges, commodity prices have remained strong, and of course, the demand for things like electric vehicles, which have, helped support the price of copper and nickel. And now, of course, into 2022 and the war in Ukraine providing more support for these commodities. And so, part of this question, of course, remains is, how long will these elevated prices remain, or are these elevated prices, going to be more of the longer term average going forward, even though they're all, of course, well above historical long term averages. I think this is a very important chart to show as well, is, the argument about buying stocks like, well, commodity producers like BHP is always, it's cheap, it's got a high dividend yield, therefore it must be worthy of buying. But, if you look in history at historical performance, of course, typically the best times to buy mining companies, of course, are when their PE ratios are very high, as you can see, for example, here in 2016 when the PE ratio got very, very high, and that marked around the long-term bottom in the stock. The reason, of course, being that the PE ratio is low because the earning side of that equation is depressed, and that's because commodity prices are low. And of course, buying when commodity prices are low means that over time you're likely to see them return to their long-term averages, which will, of course, assist the mining stock perform far better. Possibly what's changed, at least the calculus, a little bit, in the past, and probably in the early part of last decade, some of these mining companies made some pretty big mistakes through these boom times, and instead of probably doing what is now, the consensus move from most big mining boards and return that cash to shareholders and recognize that they're, the top end of the cycle, they were, of course, allocating a lot of that free cash flow to huge overpriced acquisitions, which ultimately we're seeing some massive write-downs on. So this time around, it looks like we're seeing companies like BHP and Rio, Fortescue pay out the vast majority of their profits as dividends, which means that at least there won't be any high price mistakes. And I think at least the downside risk of buying at these elevated commodity prices is going to be lower because the dividend yield, at least in the short term, will at least underpin some of the returns needed. From here, of course, a lot of the story about BHP's performance will be what happens in China with its COVID zero policy. Is it possible to beat Omicron and retain its zero COVID policy, or will it eventually need to bite the bullet and accept COVID as part of the future and into an endemic phase of like it is in most of the rest of the world, which probably involve a different vaccination outside of the Sinovac one that is widely used in China, that obviously hasn't given them the protection that they're comfortable with opening up. And of course, how long will this war in Ukraine go? How long will the sanctions on Russia last? Probably inclined to think that both of these might have longer than expected resolutions. I think even if the war in Ukraine would end soon, there will be political pressure to maintain those sanctions on Russia for some time. Possibly the only catalyst that could change that is a change in leader, which at this stage doesn't look like it's about to happen. And at least in China as well, while for the most part it seems like they remain committed to COVID zero, I think we're going to continue to have supply chain issues. So this is all good news for BHP and other mining companies with the supply side of the price picture looking pretty bright. So, if we can see spot prices remain even close to where we are now for an extended period of time, there's no doubt that BHP will continue to be a good investment for its shareholders, and at least on a dividend yield alone, should reward its shareholders. So for me, I think at least for the next 6 months to a year, BHP remains a worthwhile hold, with the one caveat being, of course, if Omicron gets away from China, and we see extended lockdowns over there. Anyway, that's it for this week's video. If you like the video, please click like and subscribe, and I will be back with you next week.